Namaskaram. In this series, we are going to discuss who can be a tax auditor. You already know who can be a tax auditor. He has to be a chartered accountant who holding COP, Certificate of Practice. One common question that I have to answer every time is, can a statutory auditor of a company become the tax auditor? Answer is yes. There is no restriction because that is beneficial for the assessee as well as for the company. Because and chartered accountant also, because the CA will get additional assignment, which is a statutory audit and as well as tax audit. So for him, it is an additional source of income. At the same time, because the same auditor is going to cross check the statutory books as well as tax book, which are not substantially too far, like 80 to 90% it is same only. Yeah, 20% additional cross check point he has to do from the tax law perspective. So those things can be done easily, and that's the reason it is beneficial, because beneficial to the company, because the CA who is doing the tax audit will charge lower fees, and a CA who is not a statutory auditor will do the extensive audit, so he may charge the higher fees. So yes, a tax auditor and a statutory auditor can be the same person, but definitely internal auditor cannot become the tax auditor, because internal audit function, he works for the management, and somebody who is not independent cannot become the auditor. So that is very much proven theory that you already know. So the accountant has been defined in this particular act. Accountant means a chartered accountant as per Chartered Accountants Act 1949, who holds valid certificate of practice. So this is written here. This we have already discussed. Now, who cannot become a tax auditor? So though you are a chartered accountant holding COP, you have the CA plus COP, you cannot become the auditor in following circumstances. So this is the negative list of the persons who cannot become the uh, tax auditor of your entity. So in case of a company, if you are a company, you already know section 141 subsection 3, section 141 subsection 3 of Companies Act 2013 has already given a detailed case study, detailed list of disqualifications of an auditor. Same disqualifications are applicable here. But sir, a tax audit need not to be done only by the company assessee. It could be done by the partnership firm. It could be done by LLP, trust, even a proprietorship, even a partnership firm. So in that case, obviously we cannot bring the applicability of section 141 subsection 3 to the other person. So for other person, they have defined the, in any other case, that means for individual, firm, LLP, trust, okay, cooperative society. So any other assessee who is not a company, for them this particular disqualification will prevail. So let's look at this, and I'm telling you it is 80 to 90% similar to the company audit disqualification, but it is not exactly same. Okay, the assessee himself, sir, I am a chartered accountant and this is my firm only. Can I do my own audit? Obviously no. In that case, how can you show the true and correct data to the government? So yes, the assessee himself, or in case of assessee being a firm or associate, any person, or if it is an undivided HUF, any partner of the firm, any member of the association or family. So owners cannot become the auditors. Owners cannot become the auditors. This is what you should remember. In case of the assessee being a trust or institution, any person referred to in section 13 to subsection 3, that is trustees, authors, members of the family of the trustees, people who can have access and control over the trust, they cannot become the auditor of the trust. Okay. In any other person other than referred in 1 and 2, a person who is competent to verify the written under, under section 139 in accordance with the provision of 140. So who can verify the written? You should know section 140. Verification means digital verification by DSC or Aadhaar authentication, and if both are not available, then physical signature we have to put as a declaration for filing the return. You know that provision 140, section 140 of income tax. Now, if you are an individual, individual's return should be signed by individual. But if individual is a minor, then parent or legal guardian can sign the return. If individual is unsound mind, then again legal guardian can sign the return. If it is a trust, then trustees will sign the return. So trustees become disqualified. If it is a company, then managing director should verify the return. If managing director is not available for any good reason, then any other director should verify the return. If managing committee has given the authority to any person appointed, then that person appointed, like CFO of the organization or CEO of the organization, then he can sign the return. So those people cannot become the tax auditor because they are dependent on the company. A dependent person cannot become the auditor. Here, thumb rule is whether you are dependent or independent person. Next, if it is a LLP, then designated partner become disqualified. If it is if not a designated partner, then any other partner become disqualified. Okay. Then if it is a political party, sir, if it is a political party, then the chief of the political party, chief executive officer of the political party cannot verify the return. If it is a local authority, a municipal corporation, then proper officer who has who is going to verify the return cannot sign the return. So cannot sign the tax audit report. So please understand, whoever is given in 140 cannot become the tax auditor, because person who is there in 140 are the controller of the organization. They are dependent on the organization. They cannot become the tax auditors. Any relative, any close relative, family member of the people who are disqualified above. So partner cannot become the auditor. Can a partner's wife or partner's son become the auditor? Answer is no. A family member or a close relative cannot become the auditor, because again the independency will not be there. Officer or employee of the company. Sir, you are a chartered accountant plus COP, but you are under the not COP, sorry. You are a chartered accountant, but you are an employee. When you go to the employment, anyhow you will not be holding COP, but for any reason you are still holding the COP. Still, because you are just an employee of the organization, you cannot become the tax auditor. Individual who is a partner or who is in employment of an officer of the employee of the assessee, that then that person cannot also become the auditor. So main person is not a main partner is disqualified. Now partner is having, please understand, individual who is a partner. Okay, so this particular partner is a partner of an assessee. That means, or employee of the assessee. He is an employee. On this employee of the organization have a partnership firm. In that these two people are partner. Even this person who has nothing to do with this company cannot become the tax auditor. Okay. Individual who or his relative or a partner. An individual who is holding a security or interest in the assessee, that means owner. Okay, once a person who is holding, if this is a firm, here if it is holding more than 1 lakh rupees, any person or his relative or his partner, he himself, his relative or his partner, these all three people will disqualify to become auditor, provided the relative may hold. This is a relative only, not him himself, not the partner himself. Okay, relative may hold a security or interest in the assessee of the face value not exceeding 1,000, 100,000. 100,000 means 100,000. So this is the number. So that is 1 lakh. For our normal understanding, you should consider it as a 1 lakh. Okay. Indebted to the assessee. You have taken the loan from the firm. You are a CA holding a COP, but you have taken the loan from that company. How can you be independent? Okay. And that loan amount is not more than 100,000 rupees. Again, it is 1 lakh rupees. So you have taken loan more than 1 lakh. Thankfully, here every clause is having 1 lakh only. Okay. So it is easy to remember. Has given a guarantee or provided any security. So he has not taken the loan, but he is a guarantor. Okay. In connection with the indebtedness of any third person to the assessee. Somebody else has taken the loan, but you are the guarantor. So again, the indebtedness will be the third disqualification here. Again, the amount should be more than 1 lakh. So all these three conditions are having 1 lakh as a threshold limit. So 50,000, 60,000, 70,000 is fine, acceptable. 1 lakh or more than 1 lakh is not acceptable. A person who, whether directly or indirectly, has a business relationship. You are having a direct business relationship with the person, then you cannot become the auditor of that particular entity. So this is again another disqualification that you should remember. A person who has been convicted by the court. This is the last disqualification is about your morality. All other disqualification till point number 8 is about independence. The last point is something about morality. whether you are a genuine person, whether you are an honest person or not, you are convicted by the court for offense involving fraud, and that too you were in jail, whatever period you have served in the jail, and the 10 years time has not yet elapsed. Okay, not yet elapsed means once. So if you were convicted in 2001 and now this is 2022, obviously we cannot punish you forever. So they are saying, okay, from here up to 10 years he cannot become the auditor, but after that 10 years he can become the auditor. Person can change. This is what government believes. All right. So these are the provisions which are related to the auditors who can become the auditor of the tax auditor of the entity. Almost similar to the provisions which are there for companies. Okay. Next, this paragraph is fine. You can read it. Then if a partner is signing on behalf of the firm, the name of the partner should be mentioned. So you know that that is a part of the format. We are going to discuss that. This section does not stipulate that any statutory auditor appointed under this point is also covered. A statutory auditor can become a tax auditor, and statutory auditor can be the same person. Okay. This is just taking the NOC from the previous auditor. You know that if you are a new auditor, then you have to at least issue a NOC, no objection certificate from the earlier auditor, whether any dues are there or not. That is just a professional courtesy that we have to maintain as a member of institute. Appointment of the auditor. Who will appoint the auditor, sir? Because in Companies Act, appointment of auditor, statutory auditor have the detailed discussion. Here the appointment will be made by the board of directors. Okay, or some officer who is authorized to do so. So here the appointment is not complicated. Appointment will be done by the board of directors in case of company, and in either case it is done by owners, partners, or members. Okay. Tax auditor should appoint, get the letter of appointment. This is for our, there is a SA 210. So standards on auditing 210, when before getting appointment, you should clear the terms of engaging, the terms of agreeing to the terms of engagement. So this is just a precautionary step that every auditor should be doing. I believe many people are not doing it. In fact, even I'm auditor of few of the organization where the clear terms are not yet signed, because I have been the auditor for so many years. So we don't revise it. But at least for the new assignment that you get, when you are getting appointed for the first time, you must get the appointment letter, a detailed appointment letter where both the parties are agreed to their responsibilities and your responsibilities. Okay. Then this is just we should charge a reasonable fee. You know that fees depends upon various situation, the complexity of the transaction, volume of the transaction, amount involved, how much time you are devoting to the work. So definitely different geographical, Mumbai have different rate, Chennai may have different rate, Delhi may have different rate. Depending upon your market area, you should charge a reasonable fee. Okay. Chartered accountant who is responsible for writing and maintaining books of accounts of the assessee should not audit the accounts. This is again independent clause. You cannot be the accountant and tax auditor of the person. Sir, can a CA firm have a CA as an employee? So yes, many big fours are CA firm and they hire CAs as their employee. Can employee of the firm sign the audit? Answer is no. Only partner of the firm can sign the audit. Common sense. Okay. Next, a consultant, a consultant, a tax consultant of the assessee can be a chartered accountant and he can conduct the tax audit, but an internal auditor cannot do the tax audit. That clarification also I have given to you. Hmm? This is another ethical standard that is written here. This is as per ethical standard. It's not a law actually. If if assessee have removed the earlier tax auditor without having valid ground for no reason. Maybe there was an argument on some allowability and disallowability of the expenses, or the auditor was little harsh with the assessee. So please understand, there has to be some genuine reason why are you removing your existing auditor. That discussion has to happen. So there has to be communication between the new auditor and the predecessor, so to understand why he was removed. And if there is no valid ground, then the institute suggests you should not accept the assignment, because to maintain the what you say professional standard, this kind of control points is put forward by the institute. Yeah, this is one of the very interesting point, and you should know that there is a limitation on maximum audit assignment. Obviously this limit is not put forward by the income tax act. This is again put forward by the guidelines issued by the Chartered Accountancy Institute, ICA. Okay, so as per that notification, one CA cannot do more than 60 tax audit. You might have heard in Bangalore and many other cities, this news has come where person has signed more than the audit and he has been held for professional misconduct and he was penalized for the certain thing. So yes, a person should not do more than 60 tax audits. This is the limit. Sir, but I have a firm, my LLP have 10 partners. Okay, so 10 partners into 60, so that will be a 600 audits. So 600 audits can be signed. But in Bangalore, there is a more audit work. In Mumbai, there is more audit work. And other partners are from some remote area where there is no much scope of audit. So can we borrow their limit? Answer is yes. So they have given this clarification. If you are having a 10 partners, then the limit is 600. One partner can sign 600 audit if other 9 partners are not signing any. In totality, you should not sign more than 600 audits. One more thing here, the limits, these particular limits, please understand, whose account has been audited under law or who carries business on proportion, but who is not required by any other law to get the books of account audited. Further, as per council decision, audit of a person carrying business covered under section 44 AD, ADA and E are not included in aforesaid limit. So this is also very important clarification. So sometime you declare lower margins, you declare lower margin than the presumptive margins, right? You declare the lower margin than presumptive margin, and then books of account should be audited. That's a condition that we have discussed, though the numbers will not be counted in this 60. So last year even I have signed more than 60 audit, that is 78 audit I have signed, I guess, as per my understanding. Exact count we need to check. So how can you sign 78 audit but your limit is only 60? I have signed 78 audit because some of the audits were audit under section 4480. You are understanding? Audit under 4480 will not be counted for the limits of 60. So many of my customers, they wanted to declare lower margin. It was the COVID period and all, you know that doing business was difficult. So many of them wanted to declare losses and to carry forward their losses, and all the audit becomes mandatory. So audit became mandatory not because they have crossed the turnover limit. Okay, audit became mandatory because they wanted to show a lower margin and claim the income tax refund, and if already some TDS is paid or something like that. So for that purpose, we have done the mini audits. So here, this 44 ADAE and ADA audit will not be considered in the limit of 60. That is one of the important aspects. The audit of head office and branch office shall be regarded as one tax particular assignment. Please understand. So if you are doing the audit of head office as well as the branch office, so you cannot talk about two different audit. It is one and the same, because here the PAN of the assessee is the important document. Okay. This is another for chartered accountants. Okay, if the company is having 50 crore or more and your fee, audit fee, okay, other fee exceeds audit fee. Okay, that means your consultancy fee is more than the audit fee. So what it denotes, you are not independent, you are dependent upon the company. You are kind of internal auditor, you are kind of the main consultant of the company or a firm. Please understand, and that's the reason you are not independent in this case. So that is another misconduct that they are writing here. Again, not that important from the tax audit perspective. I'm just looking at it and just covering if I missed any point or not. This is about form. Form we are going to discuss in next lecture, the audit format and all. Okay. Specify dates and tax audit. Here, the discussion, I'll tell you what discussion happening here. Sometimes the consultants, like we chartered accountants, we do audit on behalf of some tax consultant who are not able to do the tax audits on their own. And sometimes the client delays the data and then he hold us responsible because of your inefficiency, the audit was not completed. Now we are going to walk through 44 plus clauses and so many sections of income tax. Do you think, my dear friend, you can complete an audit in 1 day or 2 days? Answer is no. And that's the reason we should start the audits well in advance. See, we have started audit of our clients somewhere in the month of June and July already. So many audits are already completed by us. Okay, only filing of returns and all, last reconciliation and some aspects are pending. But audit is done, vouching, verification, everything is already done. So because audit takes time. So here in this particular paragraph discussion is, if the tax audit reports was not filed in the specified date during the audit or within the date, then there will be penalty for delay filing. Yeah. So who will be responsible? Whether assessee is responsible or his CA is responsible. So that depends. If the delay was because of assessee, then assessee is responsible. If delay was due to chartered accountant, then chartered accountant will become responsible. So that discussion you can understand. Yeah. The next and last important point for this lecture is penalty for not getting accounts audited under 44 AB. So how much is the penalty? If assessee fails to get books of accounts audited, then the penalty should be lower of following. So whichever is lower. The first number is 0.5% of the turnover, half percent of your total turnover during the year. Okay. Or 1,50,000, whichever is lower. So please understand, if your turnover is 100 lakh, a half percent of that is 50,000. So 50,000 or 1,50,000, whichever is lower. But sir, if your turnover is 1,000 lakh, okay, if your turnover is 1,000 lakh, then 0.5% will become 5 lakh. Yeah. So 5 lakh cannot be the penalty, or 1,50,000, whichever is lower. So half percent of the turnover or 1.5 lakh, whichever is lower, but this penalty is actually a very high amount of penalty. Even this type of fee we don't charge for doing the tax audit. So it is better to do the tax audit than not doing the tax audit, because the penalties are very high. Sir, but if there is some reasonable ground, like some death has happened in the organization or in the family of the owner, and due to that he was not focused on the business for a couple of months, and that's the reason he could not get the books of accounts audited. If there is some reasonable ground, which is very strong ground, then you can apply for immunity under section 273b, and 273b will not charge any penalty on you, because opportunity of being heard will be provided. Department will never initiate penalty directly on you without no reason. There has to be some reason for initiating the penalty. So yes, my dear friends, you should understand this, the penalty clause as well for the tax audit part. Okay, this is it for this lecture. Balance discussion we will do in the coming lectures. Thank you.